Give me a sense of where you see these trade negotiations going and what this all means for Electrolux.
Well, good morning. First of all, on the trade negotiations, previously we had allowed for a range of, let's say, between 10% and 25% tariffs on this Section 301 List 3. But currently our outlook is that tariffs will remain at the current 10% level. We're not making a specific forecast about that, but that's just what we've assumed in our outlook.
I mean, given the low visibility on what actually tariff costs will be in the end, are you doing any preparations for the kind of, best case scenario, but also worst case scenario?
Right. So we raised prices in the beginning of the year in North America to counter these potential tariffs, and then we've sort of discounted down to account for the fact that they're currently only at 10%. So we are effectively, our list prices in the market are reflecting that higher level, which was intended to come into place at the beginning of the year.
So what you're telling me, Mr. Samuelson, is that you're managing to offset higher costs by increasing prices, but are those higher prices also impacting demand?
I would say so, yes. There is, of course, an elasticity to demand, and the higher prices that we're carrying, being passed on to consumer prices, will have an impact, or is currently having an impact on final consumer demand, yes.
What will demand look like in North America? What factors are weighing on demand in North America right now?
Well, we're forecasting the market to be slightly down for the year. We see underlying sort of good consumer confidence, and of course employment numbers are supportive. But of course, with higher prices, there is some elasticity and also uncertainty around the future of the tariff situation. And we expect that to weigh a little bit. And then, of course, we have seen towards the end of last year somewhat weaker new housing construction numbers. We do expect those to come back up again, but in the short term, that has a negative impact on demand as well.
So how much scope is there for a more positive development this year overall?
I'm sorry, I couldn't quite hear that.
In terms of positive surprises, where do you expect them to come from in 2019?
Well, of course, we are still seeing headwinds in terms of both raw material and tariffs, but they could come down further, which has a significant impact on us. And of course, for us, the most important thing is the new and innovative products that we introduced here in the first quarter and are launching and rolling out throughout the year, which we have very high hopes for. So we have a solid outlook for the rest of the year.
Mr. Samuelson, do you worry about European demand?
Yes, the beginning of the year has been relatively solid in terms of demand. We saw a couple of % growth in Europe, so probably a little bit better than some people expected. There is of course, a downward trend in terms of consumer confidence, so we were not expecting a very strong market, but also not a dramatic drop-off. In fact, we're looking at a full year positive outlook for Europe.
So you expect a pickup by year-end or next year?
Well, actually, in the first quarter, we saw net demand growth in terms of consumer demand. So we're not seeing a negative number yet. It's not strong, and there might be some slight downside to that. But for the full year, we still expect to see growth in the European market.